All right. Let's see if you guys can hear me now. Can you hear me? Let's see if this works. I think you guys can hear me now. I actually see the green going. So I'm going to let some folks jump in here and then you guys can tell me if you can hear me. All right. Guys hear me now? I'm good. Mike chops. Sweet. All right, I'm just going to ask one more person to confirm before I get started. We got a ton of great information for you today, and it's going to be fantastic. So, just if you're listening to this, if you could just type in the chat that you can hear me, that'd be awesome. I just reset my computer. Sorry for the delay. Just go ahead and put it in the chat, and I'll get rocking and rolling on this presentation. All right, can you guys hear me? Yes. All right, cool. I got a thumbs up. Let's go. This will be a great conversation. Today is a really important one because the stock market is tanking and the interest rate situation is getting a lot worse, and it's impacting the real estate market, and things are really starting to accelerate. So it's really important that we dig into what exactly is happening in the market. And if you have any questions, just like always, you can go ahead and put it into the chat. All right, I just want to make sure you guys can still hear me at this point. But interest rates are threatening the housing market. There was data that just came out as well on the betting markets, basically showing that we're not going to have a rate cut until December of 2027. So rate cuts as of right now are taken off the table, which is a massive problem for the real estate market. So interest rates are threatening housing, and it's going pretty south in a big way. Interest rates have recovered slightly already, but the bond market and the stock market have basically stopped believing in what Trump is saying with this taco trades with Iran. They don't really believe that he's going to be able to solve this problem anytime soon. So I think we could see higher interest rates for longer. Obviously, 92% of the time we have a oil spike like this one, we see a recession come down the line just, within the next year. And so I think this could be one of those cases where if we see oil prices elevated for a long period of time, obviously, gas prices are higher. Oil prices are an input to so many factors in the economy. So it's such a huge issue, and it takes money directly out of the consumer's pocket. And that, I just had a messaging debate on X with some of my friends, and inflation is good because it causes the value. There's more dollars out there in some ways that cause your mortgage basically to be paid with more dollars out there, and they think like this inflation induced debt destruction is a good thing, but this is not how it works. Not when the inflation is caused by an input oil spike such as what we're seeing right now. It's obviously if the money supply expansion happens, yes, that is good if you're a fixed rate debt borrower and it makes your mortgage worth less in real terms. But when it happens when the oil shock type of when it's a supply side shock instead of a demand shock, it can really mess things up for real estate specifically. And I think we're going to have real estate be messed up potentially for the next 5 to 10 years. We're going to see a structural decline in the housing market just from what we're seeing. The numbers no longer make any sense. The rates are moving higher. The one thing that we were betting on this year for things to get better was that interest rates were going down, and we were all really excited. We saw this massive pop in January, and then obviously, the beginning of March, everything kind of just started taking off. You can see right here, we got right below 5% on the mortgage interest rates. And then we saw the 10-year treasury just completely spike, which is causing a huge issue. Here's where oil sits at, and it's a little bit higher than this today. It continues to move up and stay elevated. And this is going to be a massive, massive problem for real estate. Consumers are already on the edge. They're already loaded up with debt. They have credit card debt, student loan debt, car loans, car repossessions are near record highs. We're starting to see credit start to be, impacted. And so I think we could have some sort of liquidity crunch here as people start to exit, basically all assets. We've seen gold sell off, $1,000 already. We've seen the stock market drop almost 10% already. And, I don't know where things are going to go next, but I can tell you, the stock selling off and then interest rates going higher are a double whammy to housing. A lot of people, especially here in Florida, they look at their stock portfolios, and if they feel comfortable, they're going to go out there and buy a house cash. But when it's something like, a 10% drop, they're not feeling comfortable. It's basically just an uncomfortable position across the board. And we're seeing net migration drop. We're seeing immigration drop. We'll get into that. But basically every factor that we look at from the real estate side is negative. And why am I saying this as a person who owns a real estate brokerage with hundreds of agents and thousands of transactions is, if you're buying right now, you need to be really careful especially if you're high leverage like FHA or VA, 0 to 3.5% down. I hate to see people get stuck at the peak of the market buying, at record high prices when we are clearly in a structural decline moving forward. Now, is this happening everywhere? No, the market's very fragmented. There's even areas of Florida that are holding up just okay. We're actually seeing luxury hold up. What this is it's truly an affordability crisis. It's the people who are in the middle or the bottom who are just getting crushed. Now we also have an oversupply issue because the builders went crazy, and it's starting to add up and people are paying the price. We're already starting to see short sales. We're starting to see foreclosures across the board. And obviously oil prices going higher is going to be an issue because it's pushing these mortgage interest rates higher. So this is Lance Lambert with Resi Club. He said the average 30-year fixed mortgage rate today is 6.62. It is what it is. We were at 8% just a while ago. The same time last year was 6.8. So we're moving right back up to where we were last year. Inflation is not under control. That's what the markets are telling us at this point in time. And that's a huge headwind for housing. Again, if we don't have rate cuts anytime soon, we don't see the Fed step in and start buying mortgage-backed securities, then the housing market will eventually correct itself. Because right now we're priced at like 3% rates. Really, that's where the market's priced at, but it hasn't repriced yet to 6.6% rate. So it's going to take years for that to play out. A lot of people think, rates moved up and, real estate prices have already corrected. Then they're saying, well, I'm just going to start buying now because I see the gap. Well, you could be you're really early. Real estate, for it to correct, takes years. Sellers are unrealistic. Buyers are unrealistic. There's a gap, and then that gap eventually closes over time. So I don't, obviously there's going to be distressed properties where you can pick them up for 50 cents, 60 cents on the dollar, and it makes sense to buy at today's prices if you can get that kind of discount. But you could also just wait and rent and create some optionality for yourself, especially if renting is cheaper. And then you can get, some sort of, rent option where, hey, I'm going to do a 3-year lease, and I'm going to have the option to cancel or terminate within a 60-day notice. And that's what I think a lot of people could do at this point in time. So you can lock in your rental rates. A lot of people in Austin are already doing this because rental rates have come down so much that they're trying to do, 3 or 4 year leases because, rents are already down to 2019 levels in a lot of cases. So please be careful if you're out there buying with high leverage. Obviously, if you're a cash buyer, it doesn't matter, right? There's different segments of people out there in the marketplace. If I'm a wealthy person, what the market does doesn't even matter. I'm probably going to make more money because I have cash on the sidelines. I have money. It's the people who are the marginal buyer that are buying at this point in the market cycle that get hurt every single time. It's the FHA buyer, the VA buyer with 0 to 3.5% down that bought in 2007 that get absolutely crushed, and they have the job loss and they can't hold on to the property. Those are the people who, and that's unfortunately, sadly, the majority of people, because we have this K-shaped economy now where the wealthy are getting wealthy and the bottom 50% just continue to be poor. And it's that divide is continuing to move forward. And that's why you're seeing these proposals from like Elizabeth Warren saying, hey, we need to take 2% of your wealth from you and redistribute that, which I think personally is theft. I think it's a bad idea. If you want to fix the tax system, it's probably going to start with some sort of higher death tax, uncap Social Security and have people pay that way. Or increase the capital gains tax. And there's consequences to doing all those things. I'm not saying that you should do this, but unfortunately, you're going to continue to see wealth accumulate until some of these tax rules change. But just taking people's money who they've already earned that money and paid taxes on, I think is a really bad precedent. And I don't think that's good policy personally. If there's other ways to fix it, but this is what's going to happen is the wealth divide continues to happen. And it does impact the real estate market quite significantly. So here's what happened with interest rates. Obviously, we saw the Iran war begins, and then boom, we saw the pop right after that because oil's the input for a lot of stuff. Demand has been collapsed. This is important. Demand was already collapsing before we got into this mess. Okay, so we had already been 4 years near record low demand, all the way record low going back to, 2008. So the demand is crumbling, and now it was starting to recover because of interest rates getting better, and now boom, interest rates are getting worse, and so the demand is getting a lot worse, and people are feeling a little bit nervous about the economy at this point, and they're freaking out. I mean, I'll be honest with you. There's a lot of buyers who are on edge. There's a lot of sellers who are on edge, and people are placing their bets out there in the marketplace. And I think, I do think we're going to have more pain ahead for the sellers moving forward. And this is a great opportunity for the buyers long term. I'm not saying it's today, but at some point in time, as affordability gets better and we do see mortgage rates move down and we do see, prices come down, it will be a good time for the next generation to pop in. So this is natural. Obviously, after we saw this massive spike here in demand, that was basically a pull forward of people who were thinking about buying. And we had basically 10 years of demand in 3 years. And that's a huge demand shock to the system. So we didn't have a housing shortage. What we had was a demand shock. And those are very different things. You know this because in 2019, we really didn't have a shortage in the marketplace. It just happened because of the Fed's zero interest rate policy. And that caused a lot of people to jump into the market and buy all at once and scramble. It also caused speculators to come in and just gobble up as much as they possibly could. The hedge funds, the institutional buyers, even mom and pops were out there buying 3 or 4 or 5 houses to try to make them investment properties. And this just created this crazy incentive for people to buy these properties. And then right when the rates moved up in March of 2022, we started to see that demand just completely fall out and move along the bottom. So here's what I'm going to do. If you're listening now, I'd love to hear where you're from. Drop a comment, give me a like. I do these lives on Friday at 12. I try to do it at 12 o'clock. Today was a little late because I had an issue with the sound. I am traveling. I'm actually in Fredericksburg, Virginia right now, which, by the way, the starter homes here are $1 million. And it's a bubble. So I grew up in Northern Virginia, and this is a bubble of an area that is unique, just like certain areas of California where there's so much wealth and power accumulated here that the housing prices stay elevated regardless. There's limited supply. They are building a little bit more, but it is a completely different game than the rest of the country. Like, you can't compare Washington, D.C., obviously, to areas of Florida. They're just so different. And that's why real estate is micro. One of the issues that we're seeing across the board that's also impacting demand is this net immigration. It's falling across the board. You can see this map. And that's a huge issue with less demand that's going into housing. Like a note on this is we're just simply reverting back to normal. So we had this massive immigration movement into the United States from basically 21 all the way up to 24. Obviously, that stopped and is reverting back to normal. But the builders went crazy thinking that this demand internationally and domestically would continue forever. And they totally miscalculated. I feel like they're 2 to 3 years behind on what's going on with demand. So for those of you listening, if you can go ahead and drop, if you have any questions, I will get to the questions at the end after I do this presentation. So I appreciate you guys. And here's what I'm talking about, the wealth inequality. And this is something that is sad. I think it's something that policymakers really need to be thinking about, especially the Republicans, if they want to see, obviously housing move forward. There's lots of tax breaks for the wealthy, including the property tax proposal here in Florida, which would primarily help people who have the highest value homes. I think a lot of people get this confused. Yes, we hate paying taxes. All Americans hate paying taxes. We don't want to pay it. We're very frustrated with the system. There's a ton of wealth, a ton of theft, and people taking the money away from regular people and just spending it on their nonprofits or whatever, and the money is just funneled out of where it's actually meant to create an ROI for the taxpayers. And if we don't get this under control and this wealth situation under control and start helping our middle class in the bottom, we're going to get more mandamis. And we could even see one in Florida because the prices are just so crazy. Like, there's an upper class and there's a working class, and the middle class is like very, very small. And I think this is a very bad thing for the housing market long term, because we need the middle class to be buying homes if you want the housing market to be doing well. And if there's less of a middle class, then obviously that's a problem. So we're going to have poor people who are all renting, and then wealthy people who all own these houses. And then if you try to do tax proposals that, hey, you don't have to pay these property tax, somebody with a $30 million house, instantly gets a $100,000 benefit, while, somebody who owns a $500,000 starter home, they only get like less than $1,000 benefit. This is a huge problem. Most of the dollar amount gains, again, from those type of proposals go to the wealthy. And I don't think people really fully understand that the policies are all geared towards making the wealthy wealthier. And I say this as a wealthy person myself. I think it's unfortunate that this is where things are going. But if there's not some sort of change in attitude around this, where we're actually going to help the middle class. And I think, if you're a young person, you're listening to this, please get involved with politics and start communicating and getting involved, because otherwise this stuff is just going to be voted away, and it's going to go in such a far direction that it's going to become a serious issue. And so this isn't about politics, but it's about real estate. But the politics at this point in the market cycle drive a ton of real estate. You think about the Northeast and why they don't have the same issues. They have these, basically people say, not in my backyard. And they're saying, no, we're not going to develop. And that causes this shortage of affordable housing. Okay. It's not that we have a shortage of housing. We have a shortage of affordable housing up in the Northeast. In Jacksonville and in Florida, we used to have affordable housing. And then we had the speculators come in and it just popped. It popped like crazy. And that's part of the issue of this wealth inequality. So we want a strong middle class. If you're thinking like a real estate investor who's going to be the buyer in 30 years, well, if people aren't having kids, they're not getting married, and they're renting, and there's already a ton of multifamily and all these other properties being developed, who's going to be that buyer that's going to pay you peak pricing like they are today in 20 to 30 years from now? So you really need to think about the demographics, because the demographics are destiny. And I'll run the numbers for you. So if you stay on for the rest of this live YouTube, I will show you at the end the math of what's going to happen in Florida. You need to do the math for your area, and I'll show you how to do the math, because I think it's extremely important for you to understand the drip that is going to come on from houses from the silver tsunami that's going to impact your investment, and if you're a seller. So this is what I'm talking about. People are basically pushing everything off 10 years, delaying major life decisions. And this is a great chart. Older first-time home buyers reflects a cascade of delays, right? I don't have any money. I'm loaded up with student loans. The job market's not so good. I'm not getting married. People aren't coupling up together. They're not even going out drinking, going to the bars anymore. And so that all of these things are very interesting, and it will impact the real estate market if we don't have birth rates that are moving up. At this point, I think the birth rate's now down to 1.3. So otherwise, we'd have to have international immigration to our area in order to make up for that fact, to make up for the demand. But then you have the supply side coming on from the silver tsunami and people passing away. So it's a double whammy at the same exact time as we have these older generations. But the idea was originally that you would buy a house, you would live in it for 30 years, you would pay off the mortgage, and then comfortably retire without the mortgage payment. That was the traditional like thinking of why you buy a house. And that's the American dream. And in the golden years, you don't even have a payment that you would have. And so that, is no longer the plan, because the plan is pushed off a decade from when it traditionally was, just because of the affordability crisis. And this, basically pushes off your wealth building by a decade, which is a massive problem. Yeah, politics will never solve anything. Agreed on that. What would be better is if we just let the market be free. But the problem is, I think it's Bachman who just said this, 11111. The politicians will not let the market correct. They will not just leave it alone. The best thing that could ever happen for housing is just let it be supply and demand and figure itself out. But people just continue to try to find solutions, and they try to with good intentions. And then there's something else that pops up here that's a distortion that makes it 10 times worse. And that's exactly what we saw during 2020 to 2022. And this will continue to move forward when the government tries to manipulate everything. And this is part of the problem of why there's so much money in politics. Everybody's trying to pump their own book and find a politician they can pay off to push their situation. I think this is bad. I do think some of them have good intentions, but they don't understand how the real world works. I don't think they understand how economics works. They don't understand how finance works. They don't think past 2 to 3 to 4 phases, like what this will do in 30 years from now. I have to have the optimism, MigBro 32, that they have good intentions. Some of them don't, obviously, right? But I have to imagine some people in politics do have good intentions, but their policies just continue to be so bad, and it manipulates things in a really horrible way. And here's what's happening right now with the new homes. So as many of you know, a lot of people have been going to new home sales because they're buying down the interest rate in the threes and they're pushing as hard as they can. Well, their net margins are falling because they're spending $50,000 to $100,000 in some cases buying down the interest rates to make the payments make sense. This is where the biggest fear comes in my mind. These people are paying record high prices for this real estate. They have a low rate, but if they ever have to go turn and sell that house, they basically are just selling, they're losing that low rate that they have. And then they're selling, they're going to have to sell for $100,000 less and they're going to be trapped in there. They're not going to be able to sell it. So then they try to rent it. Now we have all these accidental landlords that have all these, new construction houses for rent, and then the rental rates fall. And that's exactly what we're seeing here in Florida when we're completely overbuilt with these communities and rents are already down 10 to 20% in a lot of these areas that are near new construction. Where new construction is where the largest issues are for real estate, especially with the FHA and the VA. And I'll actually show you an article later today that by the end of this, that shows that the FHA programs that are out there are causing this short sale spike in Florida, and the workout programs are just a little bit harder to jump through the hoops. So I'll show you the data behind that. Now, here's the forecasts from everybody. They've basically been revised down. These are the national forecasts. We're about to go negative. Zillow revised down from 2.1 to 0.9. It's a big revision, by the way. Redfin revised down to 1%, NAR revised down to 2%. This is all before the war and the oil prices spike. So I'll be interested to see how the revisions are continuing to move down now that we see mortgage interest rates even higher than they were before. Realtor.com at 2.2%, Resi Club at 1.4%. Now I think we'll continue. My thought was this year will actually be negative. Obviously, in real terms, when you compare it to inflation, again, not the good inflation that makes the value of your debt worth less. This is the bad inflation. It's supply side inflation. The inputs are going up. So this isn't money supply inflation where there's more dollars out there and makes your mortgage worth less and you have fixed rate mortgage. This is a bad inflation. This is not the one that you want to see out there. All right, let's go into things that we talked about online. Real estate market's much worse than you think. This is me on X. You can follow me at John Brooks. Appreciate the follow and the comments and the connections. That's why I started this channel. Help get the word out of what's actually going on in the market, not just the market headlines, but what is going on the ground. As many of you know, I'm an operator. I'm a real estate investor. I talk with other operators and real estate investors around the country about what's going on. It is different on what's going on in every single market, including areas of Florida. But this is what's true. The consumer is maxed out. They're loaded up with debt. The middle class is getting slimmer and slimmer, and short sales are popping up everywhere. This is just the beginning of a structural decline. I also want you to know that I've heard through the grapevine that institutional investors, these folks that bought up, 20% of the rental inventory in Jacksonville, Florida, are planning on dumping their single family rentals. I've heard this from several different sources out there. I don't know if this is true or not, but it's something to be thinking about. What happens if these folks do end up dumping some of their single family rentals in the market? Now, they've been trimming for 3 years some of their non-performers or properties that are not in good areas, properties that don't make sense financially. They bought a lot of them that don't make any sense. But if they do start trimming harder or they start unloading inventory, you could see a massive decline. The reason why is because rents are dropping and the economics no longer make sense, even with their economy sales of scale on the lending side. So it's something to think about if you're a real estate investor or a seller, because you could be competing with a ton of inventory that comes on. And a lot of these rentals are beat up. Like, they need a lot of money to turn these things around and get them up to where a first-time home buyer would want to buy. First-time home buyers, they want mint condition. They're competing with new construction and stuff like this. So it's hard if you're an existing home seller out there and you don't have a mint condition house in a beautiful location. Your house is often going to sit, or you're going to have to massively discount your property to be able to compete. And this is how you start to see the cycle unwind over years. Again, this is not something that's going to happen in a month or a year or anything like that. This stuff takes time. And this is when it stopped making sense. Okay. So when you can buy a short-term treasury and get, near a 5% yield on your money, why would you buy a single family rental property that you're only going to get, 4.7% yield? You're going to have to manage it. There's a lot of, repairs, there's risk with it, there's tenant risk, all these other risks of basically operating a business where you can get that at the risk-free rate through the short-term treasury. So the math stopped making sense buying this stuff. So I think if we see rates elevated for longer, a lot of these investors, even the small mom and pops, will start to dump their real estate. We're already seeing it in Florida. People who own 5 to 10 properties, they're seeing rents drop, they're seeing the prices drop, and they're panic selling, and they're saying, hey, I need to get rid of this portfolio. When that happens, it drops everything. So we're having a ton of hedge funds, mom and pops reach out saying, hey, I need to get rid of these quickly. And their plan is no longer the plan. And they've only held these things for 10 years. Well, the amortization schedule, the way that it works is most of your interest is paid up front. Your principal paid on the back end the last 10 years. And so they're, they didn't really benefit that much in the principal pay down on these properties. So it's like they have to decide if they're going to stick it through and go the full 30 years to have this thing pay off and be a good investment, or if they're just going to, try to cut now and put the money elsewhere and see if they can get it to work elsewhere. Then this is what I told you I'd promise you on the math for the demographics for Florida. And I'd love for you to figure this out for your marketplace. Florida has a supply problem. It's not the one that people think where we just overbuilt, but this is the truth. Over the next 20 years, we're going to have millions of, sadly, these baby boomers pass away. Well, so I did the math on Florida specifically. There's about 23.5 million residents in Florida. 22% of those are 61, 62 or older. And, sadly, they are going to pass away. Well, 80% of them own a home. We can just do the math. If 80% of them own a home, that's one home. And 15% of them own multiple homes. Okay. They use them as the retirement strategy. When you do the math, we have about 162,000 active properties listed for sale right now in Florida. You could see, and I'd love to see you guess right down below, what percentage of homes would be added every single year over the next 20 years if we just average out that math for Florida. What percentage increase would you see every single year? For example, 5, 10, 15, 20%. Every single year, a drip of more supply that comes on, because the Charles Schwab survey said, 70% of homes that are inherited are planned to be sold. So a lot of these that go to the estate, they're going to come back to the market to be sold. They're not going to need to be upgraded. It's just going to be supply. We're going to have somebody leaving this world and their house is going to become available for sale. And that is supply that comes onto the market. I'd love to hear from you. Drop below. What do you think the percentage is of people, of houses that'll come on every single year at today's available active inventory for Florida? Go ahead. Let's see it. I want to see some guesses. If you do the math, understanding there's going to be about 5.8 million people in just Florida. And so I'd love for you to calculate this in your area. Can you guys hear me? Go ahead. Drop a guess. Maybe you guys are doing the math. Because this is where you get really thinking about how the demographics and the demand are moving forward. I'm sitting in Jack's Beach walking this. Watch it. Please tell me walk 7 by 7-7. You're not a real estate agent. We honestly tell people like real estate agents, do not watch my channel. So I'm seeing 5%, 1 to 2%. I'm like, real estate agents, you guys need to get to work. You don't need to be worrying about market data. If you're a buyer, seller, investor, obviously you need to worry about market data. But the agents, they need to get on the phones. They need to start building relationships. Smoking a cigar, do art and design. Good for you. Walk 7 by 7. Love it. And if you want to connect, man, I live off Hodges, so I'm happy to connect. But no, it's 35 to 40% active listings coming on the market every single year. When I do the math, okay, that's what I'm talking about. We're going to have millions of homes be hitting the market just from demographics alone. We have to replace that. The only way we replace that is Florida has to become affordable again. People aren't coming to the Sun Belt anymore. They're going to the Midwest. Young people are looking for where they can move as much as humanly possible. Yeah, email me. Happy to connect. So my company is Momentum Realty, by the way. We're the #2 brokerage office in 6 years in this area. By telling the truth, what a concept. Telling the truth of what's happening, not lying to customers, providing great service, trying to actually, help them, not just trying to sell them a house and really give them deep understanding of what's going on in our marketplace. There are massive opportunities in our marketplace, but Jacksonville is the largest city by land mass in the United States, if you didn't know that. And we're basically 5 cities in one. So obviously what's happening in Jack's Beach is not what's happening down in Nocatee or over out in Middleburg and areas like that. But this is how the supply shows up. We see these people pass away. We see this slow drip that's eventually going to become a stream unless we get the demand elsewhere. So you're going to have to figure out, where is that extra 35% demand going to come from just to offset this supply that is coming on. So it's not oversupplied. I like this saying, Florida is not undersupplied. It's pre-supplied. We have the supply. It is coming. The inventory just hasn't hit yet. And when it does, we will see the prices come down. This is part of the reason why I sold my entire real estate portfolio, single family and multifamily properties. I saw the demographic numbers and I just couldn't get them out of my head. And I just said, I gotta sell them. St. Mary's currently can help me there. Yeah, actually, our agents we're licensed in Georgia as well. So if you want to email me, go ahead and email me. Happy to put you in touch with one of the top agents that can help you out. I don't know if you're in the Navy or whatnot, but we've got a lot of Navy folks over in that area. So I'd love to hear from you. And I'm going to answer some questions from the group. If you have questions about real estate, let me know. But will credit crack? We're seeing obviously 9% delinquency on the private credit markets, which is a huge issue. What will happen to the real estate market if this liquidity dries up and we see people just turning into cash right now? They're even getting out of gold. They're getting out of all these other assets and just turning their money into cash because everything is kind of selling off right now. And I'd love to hear below what you're seeing in your market. And of course, if you're watching this, I appreciate you guys. I can't believe you guys are listening to this. I started this May last year, and I keep having more and more people watch it. So I appreciate you. Give me a thumbs up, give me a comment. It means a lot to me that you guys are watching this channel. I'm just trying to get the word out of what's happening on the ground. And again, what's happening here is not happening everywhere. So you need to understand that I'm talking about Florida and Georgia and the Sun Belt markets. We can dig into each market individually if we need to. If you need a top real estate agent in your market, I'm happy to put you in touch with somebody who actually knows what they're doing and sells enough to know what they're doing. About 80% of the agents have no idea what they're talking about. So I'm going to scroll to the top and see what questions that we have, and we'll go through and then I'll get to your questions. So if you have a question, drop below and I'll hang around for the next 10 minutes to answer them. Yes, good quality. All right. Thanks, guys, for hanging on because I had that sound issue in the beginning. We appreciate you taking the time to bring all this information to it. I love this, Anna. And, as you know, Anna and I connected. So thank you for watching and connecting and asking questions. I answer every question that comes through this channel. And the best way to get in touch with me is by emailing me. I don't see the 10-year getting anywhere near 7%. Okay, so I'm the 10-year and the mortgage rates are completely different. So I just want to be clear on that. I meant the mortgage rates could hit 7%, not the 10-year treasury hitting 7%. If the 10-year treasury hit 7%, I mean, these investments are out the window. So that would be absolutely crazy amount of inflation that would move, the treasury rates to 7%. We'd have some sort of default scenario in that case. Inflation will stay high due to all the government debt spending. It's not going to be pretty. That is something that really is terrifying to me. We're just past $40 trillion on the debt that we owe. And that's just the debt that's on our books. That doesn't include all the other debt that we have as a nation. It's just getting worse and worse. And neither party cares to do anything about it. And it's basically a tax on future generations because they're going to have to pay this back or reduce it at some point in time. Sure, we have the largest military and that's backing the dollar at this point in time. But that, this is the infighting that we're seeing within our country and not being able to get on the same page is how great countries fall apart every single time. It's not another country that defeats us. You lose from its defeating itself from within, and we have some sort of internal strife. And I think that's sadly the direction that we're headed. And, we're going through this massive debt crisis, and nobody wants to address this issue, especially not the politicians, because if they try to address it in a serious way, they won't get elected because it means that the prices of everything will kind of reset and go down. It'll disrupt the status quo. So it's really unfortunate that's that case. Yeah, stagflation is what's probably gonna happen next, is my guess. There's definitely a housing disparity here in Atlanta, Georgia. The average person who grew up in Atlanta can't even afford to buy a house in their own city-state neighborhood. Yes, that is exactly what's happening here in the Sun Belt. Is we just had massive speculation, prices went up, and then the locals are priced out, and the only people who can afford are the people moving from California or New York or New Jersey and areas like that, and they find it cheaper down here, and they're competing with these mom and pops who are just gobbling up multiple properties, and this is a huge problem. So what are you going to do with all the locals when they can't buy anything? So it's a huge issue. Current conditions are different. Income growth is weak, and the U.S. is now an oil exporter. Yeah, we have the oil in the U.S. We do export a lot as well. Buyers here are causing an affordability. Pricing on houses. Average person in Miami-Dade and other areas, Florida cannot afford housing. Yeah, I was just down in Miami, and it was crazy. These crappy 1,200 square foot homes that are, attached homes are selling for like 600,000, and they're not even in good condition. I couldn't believe the numbers around Miami and outside of Miami. They make no sense. I mean, how are you supposed to pay for that at 6.6% rates? It doesn't make any sense. It's cheaper to rent in a lot of cases. So young professionals who are paid well can't even afford homes. Yes, it's exactly right. And again, it was caused by a demand shock that was caused by zero interest rate policy in the pandemic. The pandemic caused all of that demand to just come all at once, and it pushed prices up. And it'll start changing pretty quickly. More Mandamis is the most true thing I've ever heard you say. I don't like it. I'm all for capitalism. I don't like the socialism aspect. I don't like taking assets from one group and giving it to another, especially if it's something that the money's already earned and they already paid the taxes and that was the deal. But just going to somebody and saying, I see you have a lot of stuff, I'm going to take 2% of your stuff. That is theft in my eyes. I understand if it's a transaction and it's going through, the government wants to take their piece. It is what it is. The government provides a lot of resources and stuff, but just randomly going around and saying, you have a larger chip stack than me, give me some of your money. Even though that doesn't impact me, I think it's like really bad policy. I don't think it's a good move. And it'll cause a lot of people to either leave the country, a lot of wealth to leave the country if we do it from a nationwide standpoint. And then you have this brain drain of all these very wealthy people who leave. And I think there's another way to do it. You could explore other options that would be better. I just think these politicians are just out of control, and we really need some common sense. Donors write the laws, not the politicians. That's exactly right. They actually do. Whoever said that is factual. Unfortunately, they volunteer to write the law for you, and you just have to put your stamp of approval on it. And that's part of the issues. Who is financing it? Are they dumping their single family rentals throughout Metro Atlanta? Wow. Okay. Yeah. So it's already happening in Atlanta. A lot of this news is, Texas, Georgia, and Florida. That's where we see a lot of these folks, these institutional investors bought up all this real estate. They're starting to dump it on the south side of Atlanta, not the North Metro. 1 to 2%. Yeah, that's the trimming of the fat of their portfolios. Sitting in Jack's Beach here now. Let's see. I'm just going down the questions right now. Looking at St. Mary's. Go ahead and reach out to me. In 10-year timeline, if it's more or less in line with the data. Gotta ask the question, do you still own any Pokemon cards? Yeah, Pokemon cards are the best investment I've ever had. Yeah, I've got tons of Pokemon cards. I don't know if you guys know this. I used to be the world champion for Pokemon from 2000 to 2002. I was the #1 player in the United States for my age group. And that's where I got in love with strategy and winning and coming up with how do you plan for the next thing that comes up in the marketplace. And it relates to business and real estate. You got to get the timing right. You have to have the cards right. You have to study your opponents. You have to be looking ahead on the end game, the resources that you use now is resource allocation. Strategy card games are a phenomenal tool for being a business owner because it makes you go through that process. And if you can apply it to business, it does really well. No one ever talks about bond auctions for long bonds. The fact that large investors in other countries don't want to touch long bonds at the current rates. Yeah, the bids have been really rough. And that's why I think the government and the Fed will have to step in and start buying some of our bonds that don't sell well. And it's going to be a huge issue. And that's why I think we could have some sort of credit event in the next couple of years. The only way to get them to bite is increase those rates of return on investment if there aren't enough purchase. Miami's untouchable. I cashed out on my equity last year. I'm holding a lot of cash and waiting to buy. I did have to give up my 3.5% rate. I wonder if it was a good idea. So look, there's a lot of people who are giving up their rates because life goes on, right? I mean, life isn't just about financials and making money. You got to move where you got to move. You got to do what you got to do. I have a 2.75% rate on my house, and I make a double payment on it because it's just like I want the security of not having to have a mortgage on my house, even though I have great cash flow. It's just, you want to build up your defense before you go on offense. And that's something that is important to me. Obviously I'm in a situation where I have 3 kids, but I'm basically building my bunker of defense, even though it makes no sense from a financial perspective. It makes sense from a mental perspective. It's like, no matter what happens in the marketplace, especially in Florida, you're asset protected on your primary. nothing can take that house away from me. Nothing can take my car away from me. There is value to peace of mind. Not everything is completely a personal financial decision. Some of it's just straight up personal. So I think, it's up to you and the decision. And that's the great thing about real estate is each one of us has different goals and there's different paths to get there as well. So there's not one right way to do it. We all just need to figure out what's the right way for us. All right, cool. Insane. I'm a bigger fan of the UNC. We're still seeing tons of houses flipping happening in DFW, and I keep wondering when that starts to fizzle out. I've noticed a recent uptick in the amount of flips coming to market. There's a lot of people who are trying to fire sale their flips too, especially on the outskirts of the city where there aren't as many jobs. So just be wary of that. There's a lot of flippers who are just trying to get out of their positions as fast as possible. We saw this in Austin where people were just, they could see the prices falling and flippers have been losing $20,000, $30,000, $40,000 per house. I'm sure that's happening in DFW. I've heard some warning flags in the Dallas area. So just be careful if you are flipping there. I probably wouldn't touch a flip. Most flips, sadly, are lipstick on a pig. They're not like luxury flips where they're worth what you're putting in. So if you're a first-time home buyer looking at a flip, just be very, very careful. So with that, guys, go ahead and drop any comments that you have or questions. I'll stay around and answer them. And then I've actually got my brother-in-law's wedding up here later today. So I appreciate you guys spending this time with me, and I'll get back to my kids and wife and have an awesome day. Look, the market is important to study, but as long as you have good health, you're happy, you're good mentally, all of this stuff doesn't matter. It's going to ebb and flow. It's going to go down. It's going to go up. At the end of the day, if you build a cash cushion and you don't have to, the market won't matter for you. And that's really important. If you can build your fortress of defense, regardless of where the market goes next, it doesn't matter if it drops 30 to 40%. You are set for life. And I encourage each one of you to have that mindset and enjoy it, live it, be happy. Don't worry, don't stress about the market, but get your defenses in order now in case, so you prevent yourself and you basically escape from this type of rat race that you see at this financial rat race that's out of there. It requires you to usually you have to cut your expenses for 5 to 10 years, live really frugally, build up your cushion. If you're an entrepreneur, you just, obviously it's easier for you than a W-2 because W-2, you're kind of just stacking it away and just, dollar cost averaging. You're an entrepreneur, you can reinvest in your business and start doubling and tripling. Just depends on who you are out there. Question, do you think it's a good idea to buy in the panhandle of Florida? Constructive criticism, you can just tell, that's not enough information for me to know. It depends on your price point, depends on your area, depends on the neighborhood, it depends how much new construction is around it, and it depends on what your goals are. So if you want to email me, go ahead and email me. I'm happy to share more information. What area of Nova are you from? I am from Falls Church City. I grew up off of Route 7. I went to George Mason High School, which is now called Meridian. They actually got the high school completely bulldozed. It was the number one high school in the city. Actually, our teachers, they were ex-college professors. It was amazing to grow up there. I wasn't a very good student in high school though, so I didn't benefit from it that much. But now they basically got rid of the high school and they built all these $1 million condos and a hotel across the street from it, and then built this massive, massive school, which is called Meridian, which is kind of cool. And I heard it's still a great school. Looking to retire, sell, and then ironically, and buy in the next 10 years. I mean, look, you can take your time. The problem is if you have a house now and if you're looking to buy later, it's like your house now is going to decrease in value potentially, and then whatever you buy next. So you need to be really specific on what your game plan is and the math behind it. If math is the most important thing, obviously, if you're already retired and that, lifestyle might be more important than the money. And again, this is why it's different for real estate across the board. So look, love talking with you guys. I'm going to get back to my family. Thanks for listening. I put out a video on Tuesday at 2:30. That's a pre-recorded video. I'd love for you guys to subscribe to the channel. Give me a thumbs up. Appreciate any likes or comments you give to the video. And I do a live every Friday at noon. I'm committed to seeing you guys here and answering questions, show you what's going on in the marketplace. One more thing, actually. Let me see if I can show another. Here we go. This is the last thing I wanted to show you. This is Nate. Florida braces for short sale surge as FHA relief ends. And there's a lot of data out there about these short sales that are popping up. There were so many people who borrowed during the pandemic who are past due. They're delinquent on their FHA loans. And ultimately, there's one part in here I want to show you. Here we go. And there's lots of there's something many agents lack the experience in short sales. So their group, there's short sale groups coming back online that where they can help you. Oh, here it is. The fallout is hitting Florida hard. FHA data show that roughly 70% of borrowers received at least one workout in the past 5 years. Guys, 70% of borrowers did one workout program, which means they couldn't pay their mortgage. So they lumped that onto the back end. This is through a government program. And then nearly 40% had two or more. So there's a lot of distress in FHA in Florida. There's a great guy, his name's John Comiskey, who reports on this. You can follow him on Substack. Sometimes I help post his data as well. We're looking closely at these servicing books because there's a lot of distress that is under the surface for the real estate market here in Florida. And if you're an FHA buyer in a new construction community, it's even worse. That's where we're seeing most of the pain. You lose your job, your house is overpriced by $100,000, you can't make the payment anymore. And it's a huge problem. And the workout programs are no longer there. They're there, but they're harder to jump the hoops through. So you can see that they implemented tighter rules in, in October 1st of 2025. And there's really smart people out there like John Comiskey and Melody Wright who are saying, this will start to show up in Q2, Q3, Q4 of this year. I always say I add like a year to everybody on their estimates because real estate is just so much slower than people think. So the pain of going through this process and people figure out solutions until they run out of cash and then the distress shows up. So we're seeing people, someone sent me money. I didn't even know you could, I think somebody sent me like $200 the other day too through YouTube. I appreciate you guys. Sending me money. You don't have to send me money, but I appreciate that. I'm just here to help people. The best thing you can do actually is, just reach out if you need help. If you're in a short sale distress situation, I can get you in touch with the right people. You need a top agent in your marketplace. You want to do, an analysis. I'm happy to do that. I've done some analysis for folks for free. I always respond to things for free. I don't expect anything from this. I'm just looking to get the word out. So, but it's pretty cool that you guys want to send me some money. But ultimately, the FHA market's going to be a huge problem moving forward in the new construction areas. This is why I say, if you're in Florida, it's not all the same. There's some areas of Florida where they did not overbuild and they don't have these issues and the demand and the age demographics aren't as bad. So you need to analyze every specific area on your own. And that's why you need an expert for your local market. But the majority of agents out there, they don't even know what the silver tsunami means or the demographic means. So it's something you really need to pay attention to and do the analysis for yourself. At the end of the day, you're in control of your own investments and nobody else is. With that, guys, have an awesome weekend. We'll touch base next Tuesday. If you need anything from me, you've got my email. Appreciate you guys, and I'll see you soon.